Hey, everybody. Happy July 14th. Happy Thursday. Hopefully, you're having a great day. Thanks for joining us for our monthly Flagstar Flex series. Really excited about a couple of our session today and our panelists that you're going to get introduced here to in a second. Although I think a lot of you on here might know these guys, and they do a great job supporting us in our endeavors in this industry. So I'm excited to have them on. Stop, as I always say, a couple things. One, hopefully, your loved ones healthy, safe. I know in certain parts of the country, COVID seems to be kind of cycling back around. I know a couple areas are looking at like mask mandates again and things like that. So, as we continue to, ebb and flow through this, hopefully you're staying, healthy and safe. And then hopefully you had a great July 4th weekend and holiday. I know a lot of vacations around that time, long weekends, and hopefully you got to enjoy some time and relax and spend some quality time with loved ones and friends. But I'm really excited about today. And so let's get into that. I want to introduce, I got three people, so I'll introduce them all before we bring them on stage. But our friends over at Class Valuation are here today, and they're going to share some things with us. A lot of things around, kind of the state of the appraisal industry, where it's headed, maybe some things that are coming out here real quick. Like actually, obviously, I think one of them's on Monday, and really just kind of, get a feel for what they're seeing. Because, the one thing I've always appreciated about Class is they are really on the forefront of innovation and technology. They're always looking at how they can do more creative things and look strategic for where the industry's headed, to kind of be ahead of the curve. And that benefits us all in the industry, right? So let me give you some introductions. We got John Fraz with us. He's the CEO of Class Valuation. Obviously, he oversees a lot of the day-to-day operation, execution of the company's strategic plan, and really in getting to know John, I mentioned it around innovation. It's one of his kind of pet peeves, so to speak, in regards to something he's passionate about. And then we also have JT, as a lot of people know him, John Tallinger. He's Chief Growth Officer for Class. John, if you've had any chance to spend with him, he's extremely passionate about what he does. And a lot of that obviously in the broker space, in the TPO space, in regards to moving the needle forward and providing the service that we need. He's been with Class for since 2016, and since then he's helped lead and been part of what is a 250% growth since 2016 to now. And when getting a chance to talk to him, they're not anywhere close to being done in the next 5 to 10 years. They got a lot more on the roadmap from a standpoint of what they're going to be looking to do. And we also have Scott Rose, who's their Chief Innovation Officer. He's got 20 years of experience in the industry. He's been with Class since 2018. And he really takes a look at a lot of the different things around technology platforms, and how can he advance, kind of where Class is at in the marketplace to continue to give the best product and service in the marketplace. And you're going to hear a lot about some of that stuff today from these guys, because, really what I asked them to do, and we can bring them on stage now too, if we want to, our virtual stage, so to speak. Really, what I expressed to these guys was like, look, we do this Flagstar Flex series, right? It's once a month. We try to bring value to our business partners and just educate them on a topic related to the industry. So guys, John, JT, Scott, thanks for taking time to do this. Certainly appreciate it. How you guys doing? I'll start with JT. How you doing, brother?
Doing good. Just riding the wave of this very interesting, current market that we're in, and working our way through and keeping a smile on our face. And like you said, just working always to try and push the ball forward, but doing good.
That's right. John, how about you? How you doing?
I'm doing good. As JT said, it's a challenging market, but again, I think it's great timing for us to be here today, because there's some really exciting things happening in the, as much as you can say, the appraisal world. But there is, and we're happy to share what's going on with you guys today. So thanks for having us.
Yeah, appreciate it. Scott, looks like you might be traveling somewhere. You on the road?
I am. Yeah, not too far. I'm about an hour and 15 minutes from my house up in the mountains, but we were all in Denver this week, so I'm still down.
Nice. I just figured you had a drone and you were doing some testing on appraisals using drones, because I got to imagine that's where you guys are going next at some point.
That question gets asked quite a bit.
I know, right?
Yeah.
Well, hey, let's get into this, right? I know you guys got some information you're going to share with us. A reminder for everybody, down below on the screen, there's obviously the area where if you have any questions, you can put them in along the way. They'll pop up on our end so I can see them, and we'll certainly get the guys' opinions on anything that you throw out there. And I know you guys are going to control your deck, but let me just start with a specific, kind of a generic question, and anybody can take it. Kind of the state of the industry, right? We went through a lot during the pandemic, and I know we were joking around before, like I think everybody thought there was all these issues and around service and turn time and how do we solve all that stuff. So we're past that, right? In the grand scheme of things, and it's somewhat normalized again. But what are you guys seeing as far as the state of the industry, where we sit today and where we're headed in the future?
Yeah, I mean, I'll jump in, and then JT and Scott, feel free to follow up. But we're definitely seeing service levels really come back to normal. Turn times are down in the 7 business day range overall, nationwide average, and our on-time rates are well over 90% now, and time to assign, which I think worst case last year got to about 30 hours, is now down under 8 hours, and so things are definitely settling. Appraiser costs are now really starting to come down, not down to where we were pre-2021. I think inflation and gas prices and things are keeping them still somewhat inflated, but they've definitely come down a certain extent. I would say again, I always caveat it. We talk to clients all the time, and they're like, "Oh, there's no problem in appraisal. Appraisal's fine now." And I think in most cases it is, but I also stress that now is the time to really focus on change so that 2021 doesn't happen again. And there's tools and things going on that are going to help with that. But we need support from the lender side, from the broker side to really push these products, because if you guys don't push the products, it's hard for us to do these test cases and really prove out the technology and things. But overall, from an industry trend, great thing is that the GSEs are pushing innovation. Great thing is that appraiser capacity seems in line with where we've been in the past, pre-2021. And so from my perspective, all is good, and hopefully more and more volume is found and purchase starts to pick up a little bit. But aside from that, it's an exciting time, I think, to be part of an AMC.
JT, what are you hearing from clients?
Well, yeah, that's what John said. That's part of the problem, is that things went from so busy, so hectic, this massive influx of orders, and then a shortage of appraisers, to now, hey, it seems like everything's fixed. So part of the problem is the appraisal space is literally one of the most antiquated industries. It's so ripe for change, and we've been hearing for years, 5-10 years, that hey, appraisals are going to change, and the way that homes are valued, the whole valuation landscape is going to change. It's finally here, and just because things have slowed down, that's probably the worst reasoning in the world to not, put our feet on the gas and really, really lean into change and using technology and using innovation. The days of, when I cut my teeth appraising, so did Scott, the days of walking through a house with a tape measure and, taking pictures on, the old school cameras, those are gone. And we really oftentimes equate it to, the dentist, when you go to the dentist's office, the dentist isn't the one coming in and cleaning your teeth. That's not the highest and best use of that dentist time. The highest and best use is having a specialist come in and actually do the teeth cleaning, and have the dentist come in after and actually do what he went to school for. He or she, can actually come in and do the analysis. And that's sort of what, a little bit about what Scott will kind of get to here when we're talking about innovation and change. Yeah.
It's funny you mentioned that. I remember when I started in the industry, the company I worked for, as a loan officer, you had to actually, we were given Polaroid cameras, and we had to drive the property as a loan officer and take a picture of the property and submit it with an appraisal form that we did answer like all these questions and like staple it to it, or else they wouldn't process the loan. It was crazy. So good to hear that we've advanced a little bit.
We have made some progress, right?
We've made a little bit of progress.
You'd be surprised.
Right. So, hey, I know you guys got some info you want to share with us. You're going to control that, JT. So I'll let you guys kind of go there, and then I'll certainly have some questions along the way, but don't want to steal any of your thunder.
Yeah, JT, if you want to throw it up, I can walk through it, and please ask questions and things. I think this will get us to some good talking points, but really give you guys an update on what's going on.
Yeah, I think Beck, they can pull the slideshow up.
Oh, is that on our end?
Yeah, I think they have it. I think, unless I do it there. Yeah.
I thought you were controlling it. There you
I
go.
can control it once it's yeah, I can control it from here. So
There you go.
There we go. So again, we call this digitizing the appraisal process. I think what you'll see is the GSEs are pushing change, and the change that they're using is using technology, which we're calling a digital appraisal, and that's hence the name, digitizing the appraisal process. So you'll hear the name property fingerprint from class a fair amount. So this is our data set that we're collecting from the property. We call that property fingerprint. We use 3D scanning technology, and what it does is it actually creates a complete digital twin of the property. So we get all the measurements, all the floor plans. It's a virtual tour, so the appraiser really gets everything. And in fact, in a lot of cases, they get more from the property than they do during a traditional inspection process. So you'll hear us coin that term, property fingerprint, a fair amount. So this is really a good snapshot of what's going on with the GSEs. This is their decision engine. And I think most people here are probably very familiar with the two bookend products, waiver and traditional 1004, right? Well, look in the middle here. This is all the change that's happening right now. There's a new product. It's actually coming out on Monday from Freddie Mac. It's called ACE Plus PDR. And what this is all cash out refis now they're not going to just give a waiver. They're going to give a waiver, but they want property data collection. So that's a very key component. And there's only so many AMCs out there that actually have technology to get that level of data from the property, similar to a property fingerprint report like we create, to get that waiver. Again, there's no value on it, but the GSEs are looking for property data collection in order to get the waiver on those cash out refis. Desktop, they launched that a few months ago. That was for purchase transactions. It's relatively small volume, but again, to qualify for a desktop, you need digital floor plans, you need computer generated measurements. Again, something property fingerprint does for us. That does go to an appraiser for a desktop analysis and an opinion of value. And then hybrid. So the GSEs are active in hybrid. We're doing pilots with them. This is typically the bifurcated process. It's come back. But I will say, the data and done and all these changes, now they're actually looking at using technology versus just doing a bifurcated appraiser to appraiser type situation. So you can see here, the GSEs are pushing for change. I really think that this is the progression to, we're really moving into a world of, do we really need appraisers going out and doing inspections? And do we need to do a full appraisal on every property? So really interesting slide here. Scott is very close with the GSEs. I don't know if you want to add.
Well, yeah, that was going to be a question I had for you guys, right? Because obviously you're going to be neck deep in this, because obviously it's in your wheelhouse from a standpoint of the direction. So, I mean, Scott, what have those conversations been like?
Yeah, I mean, honestly, we've been neck deep in this for the last 2 years. We've had a great opportunity to, work in the test and learn programs, and we've done, approximately 20,000 of these just in the last year, and learned a lot from the process. And we have great data and results to really show the value of these tools and techniques. And, you were talking about the kind of state of the union, so to speak. I think some, aspects or challenges that we're up against today, which maybe weren't even really truly anticipated. And maybe it has a little bit to do with the market, coming down and appraisal turn times, shrinking again. But we worked really really hard in the beginning to get appraiser buy-in, and everybody always thought the appraisers were going to be the challenging part, right? And we built technology. We're the only provider today that uses true 3D scanning technology with full virtual renditions of the home, which gives the appraisers a lot of confidence in the process, because they can actually inspect the property through a virtual platform just as if they were there physically, both inside and out. They can take pictures in the environment. They can ensure they've seen the whole property. It leaves really no questions for them that you might hear some people talking about how appraisers are worried if they have just two-dimensional images. How do I know I've seen the whole property? Or how do you know they've seen the whole property? And so we're fighting a little bit of headwind just against some perceptions based off other solutions around the desktop, around the hybrid, that have maybe given some bad experiences. But understanding when you use these technologies that you actually get a significantly improved experience, which John's going to talk to you guys about. I mean, huge reductions in revision rates, huge reduction in turnaround time. Every single KPI in the system is improved significantly when you use this type of technology in these processes. However, the important part to understand is you really have to do that. Like desktop today, you can't really leave it out there for the fate of the appraiser to determine whether they have the data they need or not. We know with most certainty that most areas around the country, they don't, right? There's a pretty substantial amount of information required for that product. But if you supplement it with a hybrid process using our data collection solution, you get a improved experience overall, all the way around. And so we're going to try to talk a little bit about that more today and make sure everyone understands that, give these products a try. This is what we've all been working so hard to improve the future of our profession with, and with the results that we're getting back, we can show you that is the case.
Yeah, and Scott, it seems like some of these things sometimes GSEs announce, they sneak up pretty quickly. So it's Freddie that's rolling Monday? On
Monday, yep. The ACE plus PDR product comes out, and in order to gain those waivers, you need to have property data collection done. And there's only going to be so many vendors out there that are able to provide that. You do have to go through a validation process with Freddie Mac, and they'll post it on their website in terms of which vendors have gone through that and are approved to provide it. So just another key thing for lenders and others to be mindful of is that you do have to ensure you're working with the right vendors on those products.
Hey, Scott, or anybody, but Scott, since you're kind of in it right now, just for people's knowledge, in case they hadn't heard of this, well, what's in the property data report? So, what's the detail that they'd be looking for so individuals can understand that?
Sure. So, on the really on the face value of it, it looks a little different than an appraisal, but a lot of the data and information in there is very similar. It's around all the property characteristics. You have to have a detailed floor plan that shows, wall partitions and ingress, egress. You have to have images of all the major rooms in the home, bedrooms, bathrooms, great rooms, kitchens, etc. And then there's a much deeper data set around everything else from floor materials to views to walkability to any external or external influences on the property. So it's a very robust data set actually, and we've been working on it for 2 years with both GSEs, refining it and making it better. And the one aspect about Property Fingerprint is that we just image the property. We don't have to train individuals in the field to collect these data sets. It's all captured through virtual inspection. And so we have a really comprehensive, standardized, repeatable process. You send 5 people to the property, we get the same 5 results every time. So we've really created more automation and digitization around property data collection.
Yeah, I know if you want to get a mortgage broker's attention, one of the best phrases you can offer is appraisal waiver, and they'll jump real quick. So
let's say waiver.
So we used to kind of cringe at that a little bit, but we understand. I mean, don't want to put unnecessary steps in the mortgage process, but this is the piece that the AMCs like Class will be involved with, going forward. And I honestly think, as excited as brokers get about, hearing they have appraisal waiver, going forward, once it becomes policy, hopefully eventually, hybrid appraisals, this is truly the pathway, for us to get to get from the 7 or 8 day turn time to maybe getting down to the 2 or 3 day turn time across the country nationwide. It's not going to happen right away. Everyone's got to continue to build those networks, and we need more lenders and stakeholders to buy in. But this is truly the pathway for us to everyone to get their loans closed faster with more accuracy as well.
Yeah, and even today, it's a greater than 2 day improvement in the overall turnaround time.
That gap is starting to really show. Again, we're building this from scratch, so it does take time to build it, but that gap is really starting to separate from the digital being an extremely superior product. So just to go over, I think most people know how this works, and again, if it's just a data collection, you're really only looking at kind of the top half of the screen. But if we're doing a full hybrid, an order comes in, we actually assign it at the same time to one of our professional scanners and to an appraiser. Our scanner is going to go out there in 1 to 2 days. They're going to scan the property, and then it all comes in through one of the systems that we built out for an appraiser to literally sit at a desk and walk the property, Again, they get all visuals and everything that they need to come to a very credible report. And then a few slides down, we'll start to show you some of the gaps in service levels of why this process is faster and higher quality. So just a little background. Some of you are probably saying, well, who are these scanners? These scanners are individuals that we hire and train. And not only do we train them to use the technology, like Scott said, every scanner that goes in is going to get the same result every time, but we're also very focused on customer service. So we do background checks on all of them. They show up in a class polo. They're very professional. We're trying to get to a point where we don't hear any more of the appraiser was extremely rude. He or she did not take off their shoes when they came into the house. So we're really trying to change the game where it is an overall better experience for the borrower, for the real estate agent, all the key stakeholders involved. Again, we talked about this. Our solution is the only solution out there where the appraiser actually gets a complete digital twin of the property. And you can see very high imagery, again, virtual tours, so they can do spins of the room. You can see the detailed floor plan in the bottom right there. The area in green is actually the GLA of the property. So the technology even lists that out for the appraiser so they know what's counted in the GLA versus not counted. So again, there's no reason for an appraiser to have any concerns, any issues with coming to a high quality report with the data set we're providing them. So here's a little bit of a taste of what we're seeing and how that gap is widening in service levels. We've done over 15,000 of these to date. Right now, we're about 2 days faster. So again, a traditional 1004 nationwide average is around 7 business days. We're around 5 business days doing a digital appraisal. What's really encouraging is we're getting inspections done in about 2 days. We have about a day of processing time, and then the appraiser is actually turning it in 1 to 2 days from the time they receive all of the data. So we'll continue, and out of the gate, most of our data or our averages are based off of refinances, which are typically a slower process because they're not as of a hurry to get into the property. So I would actually expect that gap on a purchase to 3 to 4 days faster.
I was going to say, because a refi, not that there's not motivation, right? But there's not a buyer and seller. There's not a contract. The moving van's not in the driveway.
There's not a real estate agent saying, when are you going to get here?
I want my commission, right? Exactly. So that's interesting to see, because you're right on a purchase. Those tend to have a 30-day cycle or less, right? This would seem to, logic would dictate that we'd probably see even faster results.
When I say 2 to 3 days to get the inspection done, 90+% of the time, that's not our scanner having, it's 90% of the time it's our scanner having trouble getting into the house sooner. Because if you're doing a refi, they're like, well, can you come, later in the week? I want to pick up a little bit. Where if it's it's a purchase, the real estate agent's like, can you come this afternoon?
That's right.
So
what's interesting, John, is the last bullet on there, right? With 85% reduced underwriting revisions by 85%. Can you guys talk to maybe why you're seeing that metrics improve so much compared to like a traditional appraisal?
I'll start, and then I'll let Scott, the appraiser and the guy that's working on this, give probably a more sophisticated answer. But the big reason is photos. Time and time again, appraisers put in and it's a blurry photo, or they missed a photo. There's a discrepancy in bathroom counts. Again, our technology, you can't leave the property without having the full virtual tour. So even if they think they missed an image, we can always go back and add that image in. If an image wouldn't take with our technology blurry, so we provide very crisp, high def photos. Scott, please add.
Yeah, John nailed it. Photos and sketches are 2 of the biggest issues we see, where things get mislabeled or they're put in the incorrect spot, blurry, dark, whatever. We use high quality HDR imagery. The imagery is captured with 3 different aperture settings, so you always get a really high quality image. If the appraiser wants to add more photos, they can in our environment. And then everything also is integrated with the 4 major FormsWare providers out there that the appraisers use. So we, interface to push the data into their forms, so there's no typographical errors or miskeyed of information. And it's, again, it's more of a standardized, repeatable process as well. But on that 85%, you've talked about purchase. One thing to point out is that includes everything from underwriting conditions to request for reconsideration of value. So across the board, we're seeing less appraisals come back into the environment using these processes that we do in the traditional process. And it's probably the most significant KPI that we look at where, man, we've really made a big impact. And you only get that when you use the full 3D imagery. It's not like you get that just using a hybrid process. It really has to do with the technology that's applied to it. So I always like to try to bring up here, if you've had a bad experience with a hybrid solution in the past, don't worry, give this one a shot, because you really need to buy in and believe in what this can do for the future of our profession. And on the desktop solution, the idea there really is for everyone to kind of understand, why are the GSEs asking for all this information? And it doesn't really exist in the marketplace today, because they're pushing the marketplace to capture this information at time of listing and do it in a standard way. Today, the appraiser reports one value, the MLS reports another value, public record reports another value, and we're trying to get everybody to move to a standard, a measurement standard, a above grade standard, and use data that can be, consistent across the housing stock in the U.S. And when listing agents use this technology to market their homes, like virtual tours, we can collect all the data off of that and generate the packet needed for the appraiser to do desktop. So the future of these tools is that you're getting purchase appraisals back in a matter of hours, not days, hours, because that data will exist at time of list.
And so I know we've touched on it a little bit, but I think it's really important to point out that our solution is different. There are other solutions out there. This solution is different than what was going on 2 years ago. I had a client recently say, hey, we're not all that interested in going back to Value Verify. It wasn't that great a couple of years ago. Well, a couple of years ago, we were bifurcating, going appraiser to appraiser. We weren't live with our technology. We were still building it out. And so again, I keep encouraging lenders and everyone to say, you really need to give this a chance. Even if you went with another AMC, our solution is different. We create a full virtual twin of the property. There's no risk that it's going to come in at a higher rate of a lower value because the appraiser wasn't at the property. We've given them everything that they need. There's no reason the appraiser has to go back to the property, because our scanners collect everything when they're there, and we know before they leave the property if they miss something. So we have like a 99.9% success rate that once the scanner's there, no one's going back to the property. So, I think it's really important to just point that out, that this is a different solution. And if you haven't done one through class, you should try it, because it has been wildly successful. And again, I think there's been some other solutions that have given us a little bit of a bad name. There's historical, products that weren't great out of the gate, but this is a different solution.
And I can't tell you guys, like from an appraisal standpoint, I can't tell you guys how often that happens. It's so frustrating, class as an AMC. It's frustrating from our standpoint. If we do an appraisal and we, broker orders it through Flagstar and class does it, and we deliver it in 5 or 6 days, but then comes back, underwriting finds an issue, or we have an issue that we saw, hey, the appraiser missed something and they have to go back out. If we're in Plano, Texas, or something like that, that appraiser might have, like he might be out of office the next 2 days, or she might have, appointment, all their, inspections for the next couple of days are on the other side of town. So it's not like the AMC is sitting on that appraisal like, oh, hey, we'll get it to you guys when we can. We're relying on that one specific appraiser to go back to the property, and that's where that's what falls into the 5 or 10% of files that go off the rail or that go sideways. This is a solution for that, and it's a huge difference.
Well, and it's interesting to me, right? Because, and you guys can talk to this because you've experienced, and I think, John, you've referenced it earlier, and Scott, you kind of hit on it too, right? To me, it's about adopting and changing with time, right? And everybody hates change in some form or fashion, right? Nobody wakes up and embraces it. And I don't mean this in a negative way, but the evolution of the appraisal industry at the appraiser level, you haven't seen an influx of a new population significantly into that space, and the population continues to age. It's a reality, right?
Yep.
And those individuals are used to doing things one way because that's how they did it their whole career, and now you're interjecting technology, you're interjecting another person that's going out and doing all the upfront work, meaning the scanning and everything associated with the property. Yet I'm the one that, as the licensed appraiser, that has to review all that and then ultimately produce the report. So I'll ask you that. One of the questions that came up is like, what has the feedback been over time as you've been going through this and testing it on your end from the actual appraiser, were they skeptical about it? Were they objecting to it? And now all of a sudden, have you seen the success story of people adopting it? Because in my mind, if I were an appraiser, like, number one, I'm spending my highest and best use analyzing the data and putting a report in. I'm not doing the windshield time, driving comps, doing this, driving the property, having to go back out, JT, like you said. And that, that to me, that would be a huge benefit. And then number two, there has to be a value to not losing that institutional knowledge, because I may be licensed in Michigan and I want to move to X, but I keep my license in Michigan. I can keep doing appraisals. So can you guys talk to like those objections that you might have seen and like that philosophy for a minute?
Yeah, I'll just really quickly say, first of all, you talk about the getting fresh blood into the appraisal industry. Of course, we have, we're trying to help on that front. We're trying to help, bring more appraisers into the industry. And we can talk more about that later. But talk about, the existing appraisers that are out there, expanding their lifespan as an appraiser, their career. If they live in a cold weather climate like Michigan, they can move to Florida. They can move to a warmer weather climate and still do, the analytical side of the appraisal from Florida, and not have to go out and trek through the snow. It's a huge difference. And honestly, I will say, as an appraiser, this gets me so excited because this actually is the first time that the process of being an independent fee appraiser is scalable. You can actually scale it. You can actually do more in the day. It's the pathway for them to make more money and take more stress off their plate.
Yeah, JT, you nailed it. And I also think there's a strong misperception out there that appraisers have pushback towards these solutions. When they see our solution, John, they don't have pushback anymore because we're giving them of what they deserve, right? We inspire confidence in the appraiser community because we've spent a lot of money investing in the right way to do this. Yes, they are pushing back on some solutions where they receive a PDF with two-dimensional images and it's a bunch of text 30 pages long, and they're trying to understand the subject property versus a virtual platform where they're virtually walking through it like they're there physically. And we support them with other ways to make it more efficient with their time, like the integrations and things that we've built in that nature. And I find it interesting. The appraisers pushing back today are really the few and the loud. And then also more interesting, what we're seeing is a lot of appraisers who haven't been in the field for a long time, who sit at more institutional levels as, inside, different whatever bodies, whether it's lenders or regulators, that think this is not the right way because appraisers don't want to do it. But when you sit through our webinars with our appraisers, we have over 2,000 appraisers on our innovation panel that absolutely love doing this work. And our chief appraiser, John Dingman's out there on a regular basis. And we did have to evangelize in the beginning. We spent a lot of time showing appraisers the differences of our solution and how it will help them. And we don't have pushback. They actually really love the solution.
Well, I just pulled up the last 30 days, from the time an appraiser receives the report to they complete it, 1.62 days.
Yeah.
It's a good segue.
With technology. The ones that are using it are loving it, and they're turning and burning right now.
We don't have a problem finding appraisers. That's the last challenge. That's our lowest challenge in the whole process today, is finding appraisers to do this work. They're more than happy to do it once they see it.
I think JT, to your point, look at that slide. I mean, I'll let you guys talk to it, but I think it screams what you're talking about.
Yeah, I mean, this was a refinance, and we were lucky. The homeowner was, our scanner was. We incentivize our scanners to try to get in the house as fast as possible. And this homeowner said, "Hey, can you come this afternoon?" And they got in their car and went and scanned the property and turned it around. And the appraiser was sitting waiting for the report and turned it around 18 hours, start to finish, in a market that's about 7.5 business days. So again, as we move into a purchase world, I see this to be much more of a consistent theme. In fact, I mean, every week, we pull kind of our fastest turn times every week, and I think the last 3 or 4 weeks we consistently get at least 1 under 24 hours, or right at 24 hours. So this is really taking off, and again, we're really excited. And again, I think. Going back to the GSEs, we pulled up this kind of last slide here, is the GSEs are pushing for this stuff too. That's why they're going to, these waiver plus property data collection and the desktop. And so they're supporting this technology. They see this as, I think, the future as well. And again, we're close with them and we're partnering with them. And, like I said, I hope with the new waiver program, we get more adoption, maybe than what we saw with desktop, but to actually get a flavor of at least what the property data side of it looks like. And so we're excited to partner with you guys and hopefully start taking some orders from you guys on the new ACE PDR on Monday.
Yeah, and look, I don't necessarily know. We might not be fully prepped for Monday, but it'll be a fast follow type of thing, right?
Yeah, yeah. And just so you know, you're not the only ones that are still working through that. So I don't want you guys all thinking you're behind.
That's right.
Everyone's kind of scrambling right now to be prepared for it. But just know that we're prepared, and as soon as you guys are ready on your side, we can get rolling.
Yeah, I think for the. Oh, go ahead, Scott.
No, I was just going to say technology platforms, everybody has to kind of work through that process when something new comes out. And so I think we'll see it rapidly start to, get addressed here over the next few weeks.
And you'll start that's the thing is, results speak very, very loudly. So you'll start to hear, after it rolls out, when first of all with, ACE plus PDR, but then you'll hear, on the hybrids as well. If we can show you, if we can give you a differentiator where you as opposed compared to another lender, if you can get the appraisal back in 2 days as opposed to 8 days on that purchase loan, that's a true differentiator. And think about, John, how often when you guys are always working on making your process throughout the mortgage process from start to finish more and more efficient, but that damn appraisal is that piece that you guys are waiting for so often. And that is true, and that's a huge, huge difference. You're talking about shaving days off and being able to win deals that you couldn't before.
Yeah, look, I was going to say for all of the business partners that are watching, right? Like, I think we hit on it. These guys and Class and maybe some other AMCs obviously may be prepared for that on Monday from their perspective. But I think on the lender side of the house, I think, Scott, you said it, right? There's a lot of scrambling going on, right? In regards to this gets announced, it comes out, okay, there's conversation around it, now it's live, and things happen fairly rapidly. So if not prepared right away, it's a fast follow for us at Flagstar for sure. Obviously, it's been on the radar, and we've been working on it on our side of the house from a technology perspective. All right, so now here's the question. What else haven't we talked about in regards to, obviously I can wrap up and do a couple things on this, but just from the appraisal industry in and of itself, I know we've talked from technology, innovation, some strategy, where the industry's headed. Obviously, the GSEs are heavily behind what we talked about today as far as transitioning the appraisal, industry and process in and of itself. What else can we share with our partners that would be of value for them from the appraisal side of the house?
One of the other things that we're doing at Class is we've really taken an approach of not just being a pure AMC and working with 1099 appraisers. We've really bought into having our own staff and our own panel. We're up to 130 now working directly for Class, and the service metrics seem to be better. We have a little bit more flexibility. And so we've been doing heavy recruiting, continuing to try to grow that panel. The other thing that we're doing is we've created a pod structure. You talk about appraisers being an aging workforce. So we're building out pods with supervisors and bringing in trainees, giving the trainees our technology to learn how to actually measure a property, get all the data characteristics. We acquired a company called Data Master that helps with some of the comp selection and helps with the form filling, providing all these new technologies and continuing to invest and bring in more trainees and appraisers from the field and teaching them to be more efficient with their time. And again, we're not here we have no desire to replace appraisers. We want to make them more efficient with their time. We want to make their lives easier. And that's our focus. I know there's others out there that may think differently, but we're 100% bought into appraisers and again, just giving them the tools and technology to be successful.
Yeah, I mean, I plan to go back to it at some point. You know, I look at these technologies that are coming out and bringing in new talent, and it makes appraising fun. Like actually using real tools to do analysis and using digital, technologies to capture more information about the property, so you don't ever have to worry about taking notes while you're there. And did I miss something? Did I miss a photo? Did I do this? And it generates the floor plan for you. You don't go spend 35 minutes trying to figure out how to sketch that 6,000 square foot property with jetties and open foyers and great rooms, and you're, like JT said, tromping around in the snow in middle of winter in Michigan, or ice, I guess is maybe better for that. But
That's right. Hey, so a couple questions popped in here as we're getting towards the tail end. One of them in regards to some of the new products that you guys were talking about, like hybrid desktop appraisal plus PDR, I think it was, and then waiver. One of the questions came up. I assume I know the answer, but I'm gonna let you guys answer. Are the findings going to dictate what type of appraisal we can order? Meaning, I'm assuming that the agencies have this programmed in so that they'll tell us what type of order we need.
That's correct. Yep.
Okay.
Through LP and DU. Yep.
And I think that's a great question, and Scott, tell me if I'm wrong here, but I think one of the nice things about the new the property data plus waiver program, different than maybe the data and done before, where there was a fairly high percentage of those that got converted to full appraisal. The expectation on these data waiver programs that they're releasing now is that there's a very, very high likelihood that it is done at that point and not needing to go to a full appraisal.
Yeah.
Got it.
Yeah.
Much more certainty.
To be clear, like right now, the ACE plus PDR, which is a data waiver product coming out Monday through Freddie, will be policy. The desktop products are policy. If you have the ACE plus PDR, you may at some point to John's point, very few population loans need to move to a hybrid, which would be policy. But right now, a lot of the hybrid work is still being done in test and learn. But we, expect and hope that will become policy in the near future, and we're pretty excited about what might come in 2023.
Someone had the question in relation to class specifically. Are you guys in all 50 states and coverage within all the states?
Yeah, we are rapidly approaching all 50 states. We cover probably 80% of the households in the country today. And John, I think by October is the plan internally to be through all 50 states nationwide.
Yeah. Part of the challenge, when you get to these outlying areas, is you've got to have volume to build it. And so, again, we're at 80% nationwide coverage right now. But for areas in Hawaii, again, we can figure it out at this point. We've got enough scale and we've got enough resources that as those orders come in, we'll build it as they come.
And
again, it's not going to be, it's not going to be as fast as some of the ones you saw today, but it will get there.
It'll get there quickly. And it's been in test and learn, right? It's been a pilot. And so you can't really, justify going out and scaling nationwide right out of the gate before they actually bring it to policy, which we have a lot more confidence now they're going to do so with the desktop and now the ACE plus PDR and more of these property data collection solutions coming out of policy.
Yep. And then I guess that was the other question for somebody specifically to Hawaii. Coverage for the data collection, appraiser availability in like Oahu, Big Island, Maui, that type of thing. How does that look? I don't think about it. Honestly, it's been, we've had very favorable results in how we've scaled it out around the country so far. And honestly, we rolled out in Texas first. And I think over the one weekend we dropped like an Indeed ad on a Friday, and we had like 1,000 applicants applying for these jobs over the weekend. So a lot of people out there, and there's skill sets, that we leverage, folks that do this image capture for listings, for say. You've all seen virtual tours and listings, throughout the years. These are the same, field providers that do that type of work that we're often looking for to go out and do this work as well. Yep.
Hey, really quick to clarify, just so there's not confusion. For traditional appraisals right now, we're everywhere. We're all 50 states.
Yeah.
We always have been since the day we were open. It's the property fingerprint is 80% of the country's covered right now, just like Uber or Lyft when they rolled out.
There you go. Yeah,
we will take nationwide orders for that, and again, we those outlying areas, we build it as the volume comes.
Yeah, but good clarification. I don't want anybody to think, if they're thinking about it, that you guys only have to JT's point, you're
Yeah.
nationwide. And now you're talking about the fingerprint. You're growing it and building it out, and you'll get there at some point in the very near future, it sounds like. I guess here would be the last question that popped up, right? And I think it's more just industry related. So the person made the comment, hey, I've attended some conferences. They reference AIM, the Fuse conference last year. And there was a lot of talk on the appraisal panel about maybe the barriers into entry of becoming a licensed appraiser and everything that's required ahead of time, and not only by the individual, but then by the licensed appraiser on top of that. Have we seen any movement on any maybe requirement standards of that barrier to entry? And if so, could you give us like a highlight of what those are?
Absolutely. Well, a couple things. One is we're building pods internally at Class to bring in trainees. So we have supervisors. We have 2 to 3 trainees per supervisor. Really, using this technology makes it a lot more credible. You can allow the trainee to be out in the field and capture the data and information without the supervisor. But you're also going to see PARIA rolling out, which is a new program through the Appraisal Foundation, and states will each.
You gotta love technology at its best.
Yeah. And I will say really quickly, brokers, if you guys have sons or daughters or people that that want to get into the space, our information's there. Let us know. It's a career path. We'd love to get you guys help get them up and running.
Sorry, I think I lost my head for a second. I apologize.
You're good. He got to it. Hey, one other question. I was going to kind of wrap up, but one other question just popped in. We've had a few appraisers here. I'm just going to read the question. We've had a few appraisals on new construction where the builders and the appraisers disagree on square footage. Per the appraisers, there's a new guideline for measuring square footage. Can you elaborate more? And will the new program you talk about, which I'm assuming they mean fingerprint, have this same disagreement on new construction?
No, so that's the ANSI standard, and that is a new requirement that's come out from the GSEs, mainly Fannie. And what that is it's a long known standard. Some builders are probably going to use something very similar and maybe have adopted ANSI themselves. In most circumstances, they should tie out fairly well. And what's great about this technology is you're not depending on a human with a tape measure to try to calculate GLA. You're using a computer-based program, and it gives you room by room dimensions. And so it'll be a great tool to be able to go walk through with the builder and understand where those discrepancies may be and try to get them resolved.
Well, sorry about that noise. Apparently my printer just decided it was going to print something from like 3 days ago. It just happened to do it right now. So sorry about that.
No sweat.
Well, hey, John, JT, Scott, can't say thank you enough. Obviously, we try to put these on monthly and bring value to our business partners who get to see these. And certainly, I think you guys shared a ton of knowledge on not only just kind of the current state of affairs, but more importantly, where we're going, right? And I think that's the exciting thing to me. We joke around about like old school tape measures. I used to take Polaroids as an LO, right? And went on appraisal assignments. You joke around. I remember this guy, Warren Fisher in PA, like he had notepads of just notes and like sketches and all this stuff. And I have to hold the tape measure for him on one corner of the house to the other, like to see where we're going. I mean, let's face it, right? Everything gets done. Everybody's growing up on this now, right? So to have that technology and the availability of it, I think it only leads to a better experience for the industry in relation to this part of the equation for home ownership, right? Which is a good thing. That's what we want. We're more efficient, more productive. Things get to market faster, and transactions go more efficiently, and that's good for everybody. So, hey guys, can't say thank you enough. Appreciate you joining, and as always, thanks for the support.
Thanks, John. Flagstar team, brokers. Thanks, everybody.
All right, guys. We'll talk to you.
Yep.
Bye-bye.
All right, gang. Well, hey, hopefully we got to all your questions, which was good. Obviously, Class, huge resource in the industry. They're a wealth of information, just valuable resource. Obviously, on the broker side, a lot of that is dependent upon who you're using as a lender and if they have Class signed up as an AMC. If they don't, be vocal, right? If you like what you hear and you've seen them before and you like where they're going, be vocal to your lender. If you're a correspondent on this, obviously, you guys are in control of the appraisal process from your perspective as the lender. You should give them a look, give them a shout out, or give them a call and see. They're on the cutting edge of a lot of this stuff, as you saw, and literally that have been a champion for anything third-party originated as long as I've known them. So again, thanks to them. And then look, we'll have this call next month. So it's in August, the August 11th. And what we're going to do is a specialty lending event that day. So Eileen Lindbaum, Greg Cofton, David Agee, all work at Flagstar. They are all senior vice presidents of our specialty lending product group. And we have a lot of stuff getting ready to roll out in the next couple of days / weeks. And it'd be perfect timing for them to come on because everything will be to the market, right? But to give you like a teaser, we're rolling out HELOCs tomorrow. So standalone HELOCs, we're rolling those out. So you have the ability to stay in touch with your borrower. And instead of, potentially losing them to the bank or credit union down the street, you'll be able to do that, keep the relationship, and do it with us as the bank and provide a HELOC. On Monday, we're rolling out our first version of our non-QM product suite, which we have 3, 4, 5 versions right behind that. And then also next week, we're rolling out our jumbo ARM on the one-time close program on the construction side of the house. So we got a lot going on in specialty lending to add to the traditional book of business at Flagstar. And realistically, next month was going to be a great time to have them come on, talk about all things in their departments, right? Talk about all things HELOC, not just Flagstar, talk about all things construction lending, talk about all things non-QM lending and the state of where it's at today and where it's headed. So I thought that would be a great series for next month. So with that being said, thanks for taking the time again to appreciate. We appreciate you taking the time to share some time with us today to watch this. If you're watching it on repeat or didn't get a chance to see it live and you're watching it recorded, hopefully you see some value in this. And as always, here at Flagstar, we can't say thank you enough for your partnership. We appreciate it. We understand you have choices and we need to earn your business, but we certainly appreciate your partnership. So have a great day and we'll talk to you next month.